Hi, folks. Lee Gettess here with the Market Sense for the week of June 21st, 2016. The charts we use are courtesy of Genesis and their Trade Navigator software. Looking at a weekly bond market chart here, bonds had closed last week up here at 169.15 roughly, and we thought 171 was potential resistance, but they gapped down in reaction to how the Brexit polls are going in Great Britain. And they haven't even been up to the 167. Well, yes, they have. We're kind of ignoring the upper moving average now. The 167.15 to a little lower right in here now potentially is support. I mean, that's what we would have looked at as support anyway. But because of the gap down, you got to wonder if they're not going to break all the way down to test the 165 area here at the lower moving average. Gosh, reaction to Brexit, and this will be a theme you'll hear this whole presentation. The reaction to Brexit seems really overdone to me. I mean, yes, it matters, but my goodness, there's a violent reaction in U.S. markets that seems a little outsized to me. It's not us, but anyway, that they might hold right where they are. They're in the low 167 area right now, and they could possibly hold that as support, or they may be going down to the 165 area. And the problem is even if they don't hold that, this double bottom low here is all the way down to 161.23, so they could fall a substantial amount and really not do any serious damage. And again, the initial reaction down is because of polls regarding the Britain's Brexit, the exit from the European Union, showing them maybe not so likely to exit anymore. I guess that's bad for bonds. I don't know. Kind of weak to me. Stocks, a similar situation. They were down here at the close and then just gapped up and have stayed up all week. And it's because the Brexit seems less likely to occur. At least that's the current thought. I guess that's really good for U.S. stocks. Again, I think that's sort of weak analysis. We kind of thought resistance would be right here in the 2080 area, but because of the gap up, they've blown right through it. That might mean they're going up to the 2100 area here, but they have tried and failed so far. So, maybe that means back down here into the 2065 area, or gosh, maybe all the way back down here below 2040 before they find support again. It's very difficult for me to analyze price action that occurred for such an obvious reason, and that obvious reason being so apparently disconnected from markets and financial factors. It's just sort of a unique situation. And we have Janet Yellen testifying again in front of Congress on Wednesday, and then the actual Brexit vote on Thursday. Gosh, I think you just got to see how that goes and how they react to it. I'm kind of locked out this week. I haven't found a doggone thing I can do. So that's just me. I sure hope you can find something you can get yourself involved with that'll make you some money.